On the final day of July, the stock market is trading quietly with a moderate optimism following a highly volatile week. Starting from early August, investors are ready for the boost both in the stock and currency markets. They will get to know important macroeconomic reports and corporate reports later this week. The policy meetings by the Bank of England and the Reserve Bank of Australia will complement the picture. Wall Street closed on a Friday on an optimistic note thanks to the upbeat PCE price index and corporate reports by high-tech giants. The benchmark indexes closed last week with gains because a series of upbeat reports on corporate earnings, macroeconomic data, and Powell's speech assured investors of a soft landing in the US economy. The PCE price index released on Friday showed that the annual inflation rate slowed down considerably in June. This report is known as the Fed's preferable gauge of inflation, and such a dynamic is likely to make the Federal Reserve complete the most aggressive cycle of rate hikes since the 1980s. The PCE price index grew by 3% in June from a year ago. It's the slowest pace of the annual increase since March 2021, following a 3.8% rise in May. A slowdown in inflation confirmed the health of the US economy, apart from a stronger than expected GDP growth. Previously, Jerome Powell softened his rhetoric, saying that he did not foresee a recession threat. This reinforced the faith in a steady disinflation without a considerable economic decline. In the context of positive signs, more than a half of the S&P 500 companies already presented second quarter earnings and beat analyst expectations by 78.7%. Most of the 11 major sectors of the S&P posted gains, led by telecom services, which added 2.3%. In terms of earnings, Friday's optimism was sponsored by Intel. The company's results and forecasts pointed to an improvement in the PC market, with the chipmakers' shares up by 6.6%. Peer companies Nvidia and Marvell Technology also added 1.85% and 1.6%. respectively. Shares of Procter & Gamble rose by 2.83% after the consumer giant beat analysts' estimates for quarterly sales. Shares of Ford Motor fell by 3.42% after CEO Jim Farley spoke of a slowdown in the growth of unprofitable electric vehicles. For the week, the Nasdaq edged up 2.02%, while the S&P rose 1.01%, and the Dow added 0.66%. This rise gave the S&P 500 its highest close since April 2022. US stock index futures climbed on a Monday, but gains were tempered by post-quarterly reports and expectations of a key macro data later this week. The results of Alphabet, Meta, and Intel have already helped the major indexes on their way to new highs, and other market giants are taking over this week. Apple and Amazon are due to report on Thursday. In addition, Caterpillar and Advanced Micro Devices will be in focus. Successful quarterly reports, a rally in tech and AI stocks, and expansion of growth into other mega caps give the market hope for a stronger move higher. Specifically, Citigroup has upgraded its end 2023 and mid-2024 S&P 500 targets to 4,600 and 5,000 respectively, to reflect a higher chance of a soft landing. In addition to the corporate sector, the market is waiting for another macroeconomic test later this week. The focus will be on the July data on a business activity, the ISM manufacturing PMI, and the crucial employment data, including the jobless rate. Signs that the economy is growing too fast could raise concerns that the Fed will have to increase interest rates longer than expected. In the meantime, investors believe that the Fed is unlikely to continue monetary tightening. According to Fed Watch tool, futures markets on a Friday estimated a nearly 73% chance that rates would not rise above current levels until the end of the year, up from 24% a month earlier. Today, the market's attention will be riveted on the speech of a Chicago Fed President Austin Goolsbee, a voting member of the Federal Open Market Committee. The currency is also trading quietly, and the US dollar index remains flat. It was trading at 101.60, a 0.02% down tick lower from a Friday, and the intraday CAD for the index is seen between 101.30 and 101.90. Policy meetings of a major central banks last week triggered a storm in the currency market. This week, volatility is caused by the Bank of England and the Reserve Bank of Australia. The British regulator is widely expected to raise interest rates by another 25 basis points, and the market is divided about the policy move by the Australian central banks, whether it will increase rates or maintain the status quo. Inflation in the Eurozone was way higher in July than the official target level, and the report showed on Monday. At the same time, the core CPI surpassed the consensus. As a result, the euro grew by 0.18% against the US dollar. Unlike other advanced economies, the US looks healthy. Its GDP expanded stronger than expected by 2.4% on year in the second quarter. On the top of that, jobless claims have also confirmed robust employment until July. No wonder investors are anticipating the non-farm payrolls, which are due on a Friday, and the US dollar might gain fresh impetus. The Canadian dollar is flexing its muscles today. It's extending a steady rally amid strong growth in oil prices. The USD CAD pair was trading at 1.3188 before the opening bell, 0.5% down. The intraday CAD is seen between 1.3160 and 1.3210. Oil prices are set to log the biggest gains in more than a year amid expectations that Saudi Arabia will extend its voluntary oil output cuts by 1 million barrels a day until September. If so, this will reduce the global oil supply. And Brent crude futures climbed by 0.9% to $85.23 a barrel, and WTI futures jumped by 1.2%. Both benchmark rates closed on a Friday as the highest level since April. Oil prices extended to rally for a 5-week straight. They are likely to close July with the strongest monthly gains. Existing cuts have already curbed supplies, with the oil inventory starting to shrink in some regions, and notably the United States, as demand exceeds supply. And this move led to an increase in oil prices and helped the commodity-dependent loonie to strengthen. The crypto market is trading sideways as investors are waiting for the outcome of the standoff between regulators and the industry. Without high-impact news, the market is making minor fluctuations. Bitcoin has grown by 0.4% intraday to trade at $29,400. Popular altcoins such as Ethereum, Ripple, Solana, Cardano, Binance, and Litecoin are wavering between dips of 0.6% and gains of 0.9%. Among the highlights of the day is the report that the US Securities and Exchange Commission asked Coinbase to stop trading all cryptocurrencies other than Bitcoin before suing the exchange in June. Media refers to Armstrong, who noted that the exchange had no choice. The exclusion of all assets other than Bitcoin, which by the way is against the law, would mean in fact the end of the crypto industry in the United States. The Securities and Exchange Commission said in turn that its enforcement arm did not make formal requests to companies to delist crypto assets. The intraday outlook for Bitcoin remains within the borders between $29,200 and $29,700. If the price overcomes and settles above the upper border, the instrument will be able to climb above $30,000. The breakout of the lower border will push the price down to $28,600. Thank you for watching. We are closely monitor the markets and provide you with the up-to-date financial information and analysis. We are waiting for your questions and comments. Subscribe to our channel and see you online tomorrow.